Hello, hello, hello. Good evening, good evening. Gonna do some live charting and look at some flow, see what's going on. Let's take a look at the flow here from close. Oh shoot. Sorry guys, getting all set up still. Hey, do you hear me? Alright right now, Billy? Let's see here. I apologize for everything being thrown together. Just kind of doing some charting today. Wasn't supposed to be a big deal, but kind of looking at where things are going. As you know, I have a position right now in Facebook short. I have puts, and I'm looking for us to essentially go and fill this gap here now that we are now doing an ET setup, which is essentially when the 6 and 8-day cross and price action remains below or above both of them. So we now currently have a position where Facebook can easily drop down to around the 158 level, and that would be great. Love that. getting some weird issue here where my charting software is not getting the hourly on Facebook. What's going on there? Let's try this again. All right, there we go. Now we can see it. So here's Facebook. Here's my Facebook chart. And as you can see, I do have some Facebook puts. My current position is the Facebook 155 put, and if you take a look here on the volume profile here, all the way here on the right, you can see there's a very, very large gap that is completely void of volume, and that is because since January 9, we have not seen that price level. We zoom out, of course, the chance of finding this volume becomes greater. For instance, if we take this volume profile, we can now see the volume is actually filled here. But if we go all the way to the end, then we get volume all the way from price range of 218 all the way down. We see we still have a bit of a gap here to be filled at the 157 level, 158 level. So that is where we're going to be looking for it. But essentially, since currently the price action of Facebook is under the currently the price action of Facebook is currently under the 162 mark. It's currently under the 8-day, which is, if I'm not mistaken, 165.69. And now that the 6-day has crossed below the 8-day, which is 164, and as long as Facebook stays under that 164 level, we should see continued downside, especially since we have seen Facebook kind of break through this downside level, this downside channel. That said, if we take a look here, we can easily see Facebook from the top to the bottom. Let's see. We can see as a bounce point here on Facebook price level wise. Let's see. If we follow the trend, should be from the middle. If we follow this current trend and there is no actual breakdown, we should see 156 by March, right? And the idea is that we could theoretically bounce towards the bottom here on this channel. So let's remove some of these trend lines. So judging by this, let's take a look at Facebook's flow, if there's any flow on Facebook. Okay, my option flow has nothing for the end of the day on Friday for Facebook. Let's take a look at option time and sales. So this is the option time and sales window on Thinkorswim. I apologize for the ugly, ugly view of everything, but it's the best way for me to actually show things, unfortunately. So here is time sales. This is Facebook. So I'm trying to decipher where Facebook can go because as of right now, The expected move for Facebook is about $4 in the next week, and keep in mind that we have the market's closed on Monday. So since the market is closed on Monday, uh, I expect there to be kind of, you know, shorter volume this week, since there is very little, since there is a shorter uh, week in the market. Uh, okay, let's take a look here. Put call ratio 0.7, kind of normal. I would guess that's actually, there's more calls, but not by much. I would say that's actually kind of a normal. 0.7 to me would be normal put call ratio on any equity that is thought to be moving up, where there's bullish flow on it. Let's take a look at the option chain here. So I'm not going to go for something that's only 6 days away. When we open up on Tuesday, 4 days away, 3 days away, it's going to get creamed in IV. I don't want to deal with that. My recording not good? Alright, let's see. So we're going to go for I'm going to take a look at April to get an idea of where they want to go, because they're saying 14 points from April. Um, let's see if it's 14 points from here to April. And Facebook closed at 162.50. Let's take a look here. That means we can go to 158, 148 by April. That's the thought. So if we can go to 148 by April, the expected move is $14 by April. So we can either go from here either to what 178 or 148, and there's a gap all the way down to 146 level. That is why I took that trade. Now, about actual geopol the geopolitical landscape, and this is kind of what we do, and this is kind of what we trade, and this is the SPX, of course, because that is affected most. As you know, we were following last week the all the political stuff that was happening and unfolding, as we knew Mnuchin and Trump were, I'm sorry, as we know, Trump sent Mnuchin and Lighthizer over to China for trade discussions. We knew that essentially Trump wanted to have a deal and have something substantial on the table sooner, right? So this is kind of what we were looking for in S&P, and this has led to the melt up in the S&P, because essentially right now the China trade news, China trade deal is being actually priced into the price of the S&P. So we're kind of looking at a very, very large move on the S&P coming up soon. Whether to the upside or downside, that's questionable. Probably could be more so to the upside in the near term, only because we still don't have the actual trade deal on the table. But the trade deal will probably end up being a sell and use kind of thing, whereas everything leading up to the trade deal is essentially the the melt up. As you see, this week we moved up what 7 handles on the SPY. Let's take a look here, just to be sure. Alright, if I'm not mistaken, we moved up 7 handles on the SPY. Yep, just this week. So we had inside day candle, opened up red. You know, we ended up flying up for 1, 2, 3 days. Fourth day we opened higher. That fifth day it looked like we were going to come down, but instead we bounced at the price point, at the price action that we have here marked off. And then that last day we actually opened up higher. So let's take a look at the SPY channel that here I have drawn and see how that looks once we extend that a little bit. Because it looks like we actually broke above the channel. Something's up with my charting software. Let's try this again. Yeah, sorry, something's going on with my charting software here. But yeah, essentially that's kind of what I'm looking at. I want to see if now we broke above the channel, because if we broke above the channel, there's a good chance we're going to have a kind of a large move to the upside coming up as kind of like a follow through to all the China news and all the geopolitical stuff that's occurred this past week. Huh. Looks like I'm having some issues here with the API. So weird. Yeah. So now that we have this loaded up, we can take a look at the channel. Looks like we're just not quite there yet above the channel. We just ended at the top of the channel, and we do have all this volume here below us, which could easily come up, but it looks like there's looks like we have no big downside ahead of us just yet, short of some big news item happening. And right now, on the ADX, we have this. Okay, so this is interesting here, right? On the 2-hour, the 240 ADX, if you can look here, you shall see this big spike up here. This was where there was a big amount of short interest occurring, right? And essentially, uh, all the short interest occurred, and we got what looks like a squeeze that occurred once the short interest started to die out, and we saw a lot of bullish action take over. So we're seeing a lot of bullish action into the close here, but the selling pressure, the negative divergence, is still there. So we're looking to see if this will continue. So as you can see, generally, let me adjust the channel a bit more here. But yeah, that's the channel here. So as you can see, we're kind of just at the channel here, and we'll see on Monday. Every close, there's this thing that happens where every chart looks like it can go up or down. If there's like some sort of breakout that's possible. As you can see in BA, you take a look at the close of Thursday on the daily, and it's that inside day downside candle. While it is green, it is a hammer. It does look very, very deceiving, as we could possibly hit the bottom, as we possibly could have hit the top. But no one ever wants to catch a falling knife, and that is kind of what is happening here in the inverse, right? BA can continue to go higher and higher until it reaches 420 or higher, and there's no telling, and nobody wants to essentially call a top. So what you're going to see is continued buying pressure going in. As you can see, especially on the ADX, there is no selling pressure here. Everyone just wants more and more, and it looks like we're kind of hitting that overheating moment, uh, where if there are no sellers, um, you know, of course it can go higher, but the idea is that if there are no short sellers, where's the value of bringing it higher, right? Does everyone have the shares that they want is going to be the question. It's a matter of supply and demand. Another thing you'll notice here on BA is that BA has essentially hit the top of the channel and broke over, and essentially what we'll see is some continued upside. But as you can see, we're kind of hitting that top, and it will be a matter of whether or not the volume can be sustained into the next weeks. Let's take a look at the chain here. So BA closed at 417.97 here, right, with a high of 418.05. BA has another 9 points in expected move in the next week, in the next 4-day week. If we go 9 points from 418, let's say instead we don't go 9.5 points. Let's say we only go 4 points, right? So what, we're gonna go to 422? Um, that's the question. So let's take a look at the chain here for next week, right? 420 calls are, let's see here, $3.65, 380, right? So for 370, you have that 420 call, which brings us to 423, which means that if we only have a move to 422, you're not getting paid. That's assuming that your end goal is to exercise or sell for breaking even. But the idea is like assuming that potentially that you don't get that $10 move up in one direction all the way to 422, those are going to go worthless. That said, bringing them in the money would definitely bring some value and some delta to it. So you can definitely scalp some delta. But the idea again is uh, if they are at close of Friday 375, you need to move to 423.75, and they would be rapidly decaying as you stay under 420. So before you can even start thinking about getting profit on those, you need to at least get $3 on BA. So you got to follow the Momo there if there's any sort of news or anything that's happening. So here's something interesting, right? According to our option flow tool, let's take a look here. This is our option flow tool. That's some SPY flow. We have a lot of bullish SPY flow, right? That's long at 275. And it was long 250K, 270K, 257K, and then another 431K. So let's take a look if we can find those. Those were all at close, right? And those were all 3:58 p.m., 3:50 p.m. So those were all at close, and those were all in the money strikes, right? In all calls, right? So let's take a look if we can find those particular strikes. That was 275 strikes. So yeah, they're right here, right? Volume, okay? 30,000 open. Let's see if I can show this to you. Hold on. Okay, there. So let's see if I can show this to you. All right, so if we can look right here, you see this 275 call right here? Look at this, okay? They were 30K, 30,000 open interest, 32,000 traded, okay? Which means only 2,795 were over the open interest, which means that, I'm sorry, only 2,095, not 2,700. 2,095 contracts were over the open interest. We don't know if that was if those were traded to open or traded to close. So come Tuesday, we're gonna have to reopen this, and we have to see whether or not this open interest is still here. Now, another thing you'll notice here is at the 280 level, we have 47,000 contracts traded, while 34,000 contracts open interest. Okay. Now, this brings me to believe that there is possibly a chance that we could see 280 next week if we have still really 20,000 contracts open interest next week. That is assuming that we have the news come that we need to see. Put side of things, we start to see a little bit of volume coming in, but not so much open interest. But we do see some volume here coming in, outlier volume uh, of in the money puts. For instance, 276s, 276.50s, 277s. So at the money puts, in the money puts, we have a lot of volume traded. There was only 593 open interest here, and then there are 25,000 contracts traded on top of that. This is something we're going to have to pay attention to come Tuesday, because if that is open volume, maybe there is some big money calling the top, right? I mean, 276.50, 276, that could also be a spread. That could be a giant spread where someone's trying to maybe capitalize on that 6 cents difference. But 25,000, that's a lot of money to put on the line. 25,000 contracts, that's quite a bit of money to put on the line to do that. So that is going to be questionable, I think. So we're gonna have to watch that come Tuesday to see how those contracts perform, because really perhaps we might see somebody trying to sell someone trying to actually call the top here, and if that's the case, we're gonna have to watch that. Now, if we look at SPY and we look at BA, I don't think we're quite there yet in saying that the top is here. After all, we were expecting this melt up, and we are getting this melt up. And now that SPY is kind of breaking over and once again starting its squeeze, we should expect to see a little more upside, assuming the market internals allow for it, assuming that the news cycle allows for it. Let's see. Anything else interesting? Oh, yeah, our buddy. Oh, there was some other SPYs here that didn't show up here when we looked it up. Huh. Oh, yeah, there was. Okay, so yeah, another. That's only 20,000 though. 279.50 on the flow. Okay. So let's take a look here. Facebook, we have no flow on. Okay, so here's another interesting one, right? We had QQQ flow. There's a bunch of QQQ bullish flow, but there's also bullish Walmart flow, WMT. So this is where things get interesting, right? So we have some bullish Walmart flow, WMT, and Walmart's kind of doing the same thing that BA is doing. It kind of has the same patterns, and it is currently starting to attempt to have its squeeze on the daily, which could bring us to the 106 level to fill that gap. I'll show you right now. So here you can see the chart. So here you can see the chart, and as you can see, there is a bit of a gap here. I'll show you on the volume. So I'm going to open up the volume profile here. So here's the volume profile, right? And essentially, what we see here is that we built the foundation. We have essentially. One second, let me see if I can show you the buy and sell colors there. Okay. So here we have essentially built the foundation here on Walmart, right? And the next step is essentially to get over all the price points. And as you can see, we just got over that one big point there at 99.59, which is now the start of a bit of a pocket, right? And the pocket in volume brings us all the way down to all the way to 101, possibly even higher. Let's take a look here. It brings us to around 101.11. And if we're going to follow that gap, we have a gap to fill all the way to 102 and then 105. So Walmart looks like another interesting play. And on top of that, you have all the same things that we just saw in BA, where we have the volume starting to pump. We have TTM squeeze starting to go. As you can see here, the TTM squeeze is going to start to squeeze to the upside, right? Assuming that the market allows for it. But if the market does allow for it, if Trump doesn't have anything to knock down the market with, and we don't get any major crashes, it's very likely that Walmart, another one, could possibly go to the fill the gap and maybe even go to highs. Not going to say it's going to happen yet, but thinking that it could. The other thing again, I gotta keep going back to Facebook because of this big volume gap. I can't get over this big volume gap. The idea is that if we break this trend here that was set up back in January, pre-ER, and as you can see, it's kind of losing all its pre-ER, all its post-ER steam here, as it never really did anything after its ER, past its one gap. And what I would expect is for it to essentially fill this gap back here to the 150 range, 152 range, before it can go higher. So that's kind of what I'm looking for there in Facebook. Next, Amazon. So Amazon is a very interesting one. Amazon already broke through its speed channels. We now see that essentially Amazon's going to be flat here, and it's probably it might just end up staying in the channel. Now that Amazon is a logistics and service company that essentially just ships products and arranges shipping with products. So what I'm thinking here is that it's very likely that unless Amazon gets some news or gets a creative M&A, which is possible, I think that we're going to see Amazon continue to trade in this range, and there is a very high likelihood that Amazon now with the added competitors, added quality competitors, I should say, from Walmart, from other companies, I would expect them to actually start to make a move down as perhaps sellers see other marketplaces as a place to put their time and money into. So if that happens, um, it's not out of this world for us to see Amazon make its way back under 1600, as well, we were just at 1700 for that one day. I believe that was the post ER, how it came up to 1770 and then it came all the way down. So the idea is that we broke this low here pre ER that was made in the channel, and we're now hovering within this channel. So unless Amazon, again, a creative M&A or some sort of some sort of news catalyst that will guide it higher or lower, I expect it to kind of stay in this channel and possibly channel all the way down to the 1500 level, where we should see yet the next move from there. But I don't think that getting to I don't think that 1500 is out of the uh, I don't think it's out of the question here. As we can see, that there are a lot of price points here from 1560, and we can go lower through. And there is still that little bit of a gap here that needs to be filled. It looks like my program once again acting funny. I guess TD is trying to tell me something when they're not letting me chart on a Saturday night, right? Let's see if it lets me connect. Yeah, so it looks like I'm having some difficulties with TD and getting data from TD right now in my MotiveWave. I'm trying to figure that out right now, but that is kind of how things look at the moment. Alright, so now MotiveWave is not being very nice with me. Luckily for us, this is all on a VNC machine. Alright, let's try this one more time. I'm going to look up like one or two more charts, and then I'll call it a night because I know you guys don't want to be with me here on a Saturday night. It's ridiculous. No one wants to be with me on a Saturday night. Besides my wife, who's wondering why the hell I'm on the computer on a Saturday night. Yeah, so it looks like I'm having a bit of difficulty with MotiveWave right now with my charting program. It's not letting me access the TD data for whatever reason. Oh, there it is. Now, yeah, I'm just having some weirdness. So, okay, I'm just going to look at a few more charts here before calling a night. But just to show you where Amazon can go within the next couple of trading days or weeks, I should say. So we're going to look at the weekly here on Amazon. So as you can see on the weekly here on Amazon, Amazon is also kind of getting ready for either to base here and fill up this gap that was created here at the 1561 level, which means that Amazon could possibly just melt down to the 1560 61 level, right? But also, I must say that it looks like there is some possibility here for some turbulence if we look at the weekly, because uh, on the weekly we haven't really been able to stay above certain key levels, and we're just making lower lows at this point. This is the first weekly candle that can be construed as bullish on Amazon, so we're just going to have to go with whatever the flow kind of tells us. But if we also look at the weekly, we also have a squeeze kind of gearing up on Amazon. I also want to point out here that the ADX, as you can see here on Amazon, is starting to go kind of bearish. There's a lot of negative divergence here, and the idea is that if bears get control, this can very easily drop 40, 50 handles in a day. It's not really a big deal for Amazon to drop 40, 50 handles. Um, that said, the overall divergence is currently to the downside, and we do have, let's see here, let me just take a look at something here with divergence, because I use the ADX and I use that with a lot of the algos as well, and I'm trying to decide here whether or not this can actually remain bearish or bullish or whatnot, because right now it looks like we can actually get some positive divergence on Amazon to some upside here based on the squeeze and based on where the ADX is, based on where the DI positive, DI negative, based on where the positive and negative divergences are. So I'm thinking that it's very, very possible that we could see some semblance of squeezing here. Generally, when divergence is like this, man, all these charts are in no man's land to me when I look at them. So I guess it'll come down to whether or not the price action is going to dictate to us the bullish or bearish action on Amazon. Whether or not we can actually, if we maintain this particular trend here, and we maintain that we stay under this particular trend line here, which essentially says we have to stay under 1632. Amazon should continue to go lower with possible targets under first target at 1550 with targets under 1500. If we actually follow, the crazy volatility that we had going by weekly, 1200 is not out of the question. When everyone's screaming that the sky is falling, the sky is falling, um, you know, that's generally a good time to load up. Now that everyone thinks that everything is all hunky-dory and we're going back up and back up and back up in the markets, now might be a good time to start taking some, dated hedges, just in case the market actually does come down. That one day that it does come down, you will probably be paid out for, your year. So taking that into consideration. The other thing is, and I cannot stress this enough, um, again, going geopolitical news-wise, we do have some headwinds ahead of us with the quote-unquote border security and what Trump is going to be doing with going forward with his border wall, and whether or not the Democrats will be successful in blocking it. It will set a precedent. If Trump essentially gets away with essentially taking funding out of the Department of Defense and taking funding out of other wings of the government, this sets a very, very dangerous precedent that essentially presidents can just declare a national emergency for whatever they want funding for to get what they want. And this is going to be a very dangerous notion and will essentially cause a lot of volatility going forward, because now this gives almost a blanket um, this gives almost a blanket authority to the president. So going forward, we're going to be looking at those headlines and how the media digests those headlines, whether in a positive or negative light. I'm going to assume that they will essentially digest it in a more negative light, and we will end up seeing a lot more headwinds coming out of the media. There will also be other things, like it's going to be essentially the trade rhetoric and how fast we can get uh, a trade deal in place. But more so than not, it really depends on whether or not the trade deal will be done in place fast enough that supply chains are not destroyed and are not that supply chains don't need to be reworked and reassessed. If the supply lines are still there, we could very well see all-time highs once once there is a trade deal in place. It will, of course, depend on tariffs and other things. But that is kind of what we're going to be looking forward to and looking to trade going forward. We also know that Kudlow is leaving within 6 months. So we should be expecting a trade deal sooner than 6 months. That's one thing that we should be expecting, right? We knew that the trade deadline was was a soft deadline. We knew it wasn't a hard deadline, so we knew that essentially it was going to be pushed back, and we saw that in the news. So going forward, we're going to see probably either A, new deadlines being talked about, or B, we're going to see actual steps in progress come out in terms of what has been discussed this week. So if we do get to see those headlines and the media likes those headlines, yes, we should see around like 282, 283, 284. Not out of the question. We should see this melt up. Until then, uh, we're just gonna keep playing the trend. The trend, of course, as we have seen, has been, melt up, melt up, melt up, with some pullbacks, but consistently melting up. And again, I cannot stress this enough. I started taking dated put positioning, getting ready for any particular meltdown, because the very second there is going to be some sort of negative news, and we are looking for some other negative news as well, because the Mueller report is supposed to come out sometime in February. We're now waiting for the Mueller report to come out, and that will probably be a very, very large negative headline that we're going to be looking forward to, uh, based on uh, based on the the current political climate in Washington. I mean, think about it. Trump just did just declared a national emergency to get his wall, right. Essentially, he's now playing with fire, and we should expect the Democrats to now try to lasso him in some sense, right? Whether it be threatening him or actually going forward with any sort of Mueller revelations and Mueller documents, we shall see. But going forward, we're going to see we should expect some more political headwinds for Trump. And one thing that we should especially expect going forward is to see whether or not this president of setting national, declaring national emergencies to get funding for personal projects is going to actually stick. Because if that sticks, that will be that will cause a lot of volatility in the markets. In fact, that whole all this political stuff is going to cause volatility in the markets just because that will cause headwinds in how things are negotiated going forward in Washington. Think about it. If the president can just have his way by declaring a national emergency, why would there be any negotiations going forward? Everything will be priced in as a win for the president going forward because he could just declare a national emergency. So let's just consider that. Um, so yeah, again, going forward, we'll be looking to trade Amazon if it breaks over 1630s. We'll be looking to trade Amazon to the upside for a possible melt up. If it can't break over 1630s, I will be actually looking at out the at very far out the money puts, probably around 1200 strikes for maybe a month or two out, looking for that one day where Amazon has that 15% down move. Because now that Amazon is a shipper, right? Let's take a look at XPO, right? Because Amazon they officially changed their charter. They're no longer an online marketplace, even though they are an online marketplace. But Amazon changed their charter, and they are now a shipper of goods. And what we're going to be seeing, more likely than not, is kind of a similar drop on Amazon as we've seen on FedEx and XPO and all these companies, but not too major of a drop. Now the other aspect is it has this already been priced in because Amazon has already dropped all the way down to that 1400 level one time. Question is, will it do it again soon? And that is something we'll have to wait on with momentum. Anyway, like I said, I don't want to keep boring you all night. It looks like, again, my TD feed is starting to bug out and not let me get charts. So I'll just quickly show you this 1 week on FedEx chart. And all I'm saying is, why can't this happen again? You know? I mean, Amazon's right there. It happened a couple times, yes, but let's see. But why can't it happen again? Amazon's looking kind of weak, unless it's literally just accumulating bulls right now at this level. So just a quick look at the volume before I log off. Okay, I guess I'm going to have to leave it there because, oh, there it is. Okay, here's the tick data. Let's bring that to the right. Let's add the bid and ask colors. So here's the bid and ask colors. Here's the volume. And as you can see, we're, again, I can't stress enough, we're kind of in no man's land. You have all this volume empty here above, and you have a little bit of volume here. It's very easy to get caught up and say, we're going up or down here. But I have to wait for the momentum, and until we actually break above that 1634 level and close above 1634, it's very, very difficult to stay bullish with Amazon because until then we're just going to chop, chop, chop and stay at this one level until Amazon wants to make a move. Now, the other thing is that it's not out of this question for this equity to stay at this level and make a 50-point up and down move every day and stay at essentially between 1550, 1650 for the next 2 months and literally just burn out every single contract player there is. That's not out of the question. So that's also something to keep in mind. But as of right now, there's just so much volume here, and there's not a whole lot of volume above here, even though we have been at that level. And you know, the trend dictates that we can very easily go back down to 1400 levels, 1500 levels. So that is something I will be looking to track going forward on Amazon. Because the moment that big move happens, I want to be a part of that. Anyway, gentlemen, have a great evening. I will be posting up the algo scans in the Discord channel, so you guys can check out the algo scans for the weekend. As you guys know, uh, the algo scans look kind of like this. Let me close this up. Algo scans look kind of like this right here. And essentially what we have here is a list of all the equities and what they kind of are doing. Um, and essentially what this tells us is the bias for upside or downside an equity has. And the time cycle inequity is in. So time cycle 1, 2, and 3. Uh, time cycle 1 being the first position. Position 1 being a 68% chance of moving up or down, being 1 being upside, down being 0, right? So when you see a position being enter position 1, 0, like we have on C, that means there is a high probability, I'm sorry, that's not C, that is, yeah, that's C. Yeah, so that means there's a high probability that the monthly candle will be actually a downside candle, and it is trying to enter a position to squeeze to the downside. Um, we shall see how this goes there, but that is the general gist of the time cycle system. Position 1 being downside, 68% chance downside. Position 2 being less than 60% chance of whatever the bias is. Again, 0 being downside, 1 being upside. Uh, Once you are in position 4, you essentially do the reverse. So for instance, here on BA, we are in position 4 on the 4-day, right? Upside, which means that we have been squeezing for 4, 8, 16, 20 consecutive days right now, and there is a high probability of a downside move occurring within the next time cycle, being time cycle 4 or 5, right? So in the next 4 days, we should expect a generous pullback on BA before the next position. Okay, and that is generally how we read the time cycles. So that is going to get uploaded right now for our members, and that is basically it for tonight. I will be doing another charting session on Monday after the futures have closed. I'm sorry, when futures have opened. I'll be doing another charting session on Monday evening, just to get an idea of where the algos could be going